All right, welcome back for another episode of This Week in Charts via Carnivore Trades and Wall Street for Main Street. If you've not done so already, please give the video a thumbs up, like, comment, subscribe to the channel. Come find Jason on Patreon, or come find me on carnivoretrades.com for swing trading alerts and analysis. Anyways, let's get into it this week. So markets ending positive here for the first week of the trading year. And we had a nice rally. I'm doing this video on Friday afternoon after the close. And we had a nice pop. The catalyst here was the non-farm payroll number, and surprisingly enough, that number came in very hot. And previously, the day before, Thursday, we had the private number, which is ADP. That also came in really hot. And well, why didn't the market sell off? Well, if you ask me, it was just a classic sell the rumor, buy the news move. So you can see we're actually down pretty substantially on Thursday, which was after the ADP number came out. The markets were actually up pre-market, and then we gapped down on Thursday, and we went down to the lower channel of this little lower trend line of this channel here. And then this morning, if we flip over to the futures, I can show you here, we were down again as well ahead of the non-farm payroll number, and they actually dumped us just a little bit right before that number came out, got a few bears on board, and then they just squeezed it higher all day long. Now, what happened? Well, it's just like I said, sell the rumor, buy the news. I think too many bears are on board. You guys know I've been calling for some type of a January rally, January effect rally, post-tax loss selling. And I said previously on my channel, like this down move here, and then this kind of sideways consolidation, technically that's bearish. But to me, it's just too easy. And I've seen a lot of bears on my timeline, like getting very loud here, basically kind of claiming victory before this move is resolved. And I said, I think this bear flag will fail and we'll go to the upside. And if you look on the weekly, we'll just flip back over to the spiders and I'll clean this up for you. But going back to the weekly, and I know I pointed this out last week as well, all we did was come down, test this green bar low, put in a higher low last week, and now another higher low this week, and we closed above the 20-week moving average now. So, daily bear flag, but the weekly is more dominant, and the weekly is still saying that the market was okay. So that is why I maintained the fact that I think we're going to rally here. And now, again, this is a short-term rally, short covering rally. We'll probably see a little bit of January effect. We'll see some bidding here. Some stocks like Apple here, they did save this 129 level by the end of the week. So you can see the weekly there. And they did the same thing last week. So another tail candle, and they just closed it above that. Tesla, they also saved the 110 handle. So that was that previous all-time high right there. So that was an important level for them to save there. And a lot of stocks, again, are starting to see January effect bids. Take a look at PayPal. This is one we had with Carnivore Trades. Took 13.5% on that this week. And that is up 18% off the lows from last year. And that was really just, late December. So it was only like 2 weeks ago. Another stock that got upgraded in addition to PayPal is Square. This is up 19% off the lows. So you're seeing kind of, it doesn't look like much here, but that's a 19% move from the low to the high there. So we're starting to see January effect plays in some of these names. And I think that'll continue. We also have CPI next week, so we have to be careful of that. But I want to show you something here. I want to talk about the 2-year. So this is the 2-year Treasury note futures. So we had a hot jobs number today. Like traditional normal logic would say, well, if the jobs number is hot, then that means the 2-year should be selling off, meaning the yield is going up due to inflation, correct? Well, the 2-year was up 37 basis points today. That tells me that the market is looking for CPI to be cooler than expected. So essentially the 2-year is calling BS on the jobs numbers. So we'll be looking for that next week. And additionally, another thing here, the 30-year, ZB, this is up a whopping 1.4% on the day. For those of you who are not that familiar or haven't been around for a long time, 1.4% on the 30-year is like a ginormous move. That's like the equivalent of the NASDAQ being up 5 or 6% in a day. So, I mean, this is the most stable asset in the world. This should not be up this much. And it is today. Now, what that means is in the short term, stocks are breathing a sigh of relief because the yields aren't going out of control. But in the future, what that means is we're getting closer and closer to recession. And the market is pricing in a major slowdown here, and it's looking for safety. So right now in the short term, that's good for stocks. But I think once the market realizes that this is a problem, it could get ugly pretty quickly. By the way, take a look at the yield curves here. Sorry, that's my calculator. There we go. Again, they did 2s and 10s did dip pretty sharply this week. It did start to correct today, as you saw the 2-year upticking there. 3-month and 10-year, a whopping 1.058% inversion there. Guys, this is not good. If we look at, go back to 2000, we're back below that level now. So not a good thing here. In the short term, the market doesn't care because, again, market mechanics matter. There's too many bears on board. We just need to reset the technicals, if you ask me. But this is going to be a huge problem down the line, and probably not that far down the line. So anyways, over to the spiders again, just really quick. There is a little resistance here at this gap fill. That's 389.63. We never quite got there today. I think we can get through that. We have a pretty strong move here with good volume, and we've been basing for the last 3 weeks. And if we break through this, that's going to give you some compression, or that's going to give you some, we've had compression and coiling, so we should get a good move out of that. So I think we can get through that level. But the next level there would be 395, and then the even whole round number around 400 there on the spiders. For the triple Qs, so this is still a little bit on the softer side. We never closed above this pivot at 270.15 or this red bar high. However, the weekly is still okay. We came down here, we tested this green bar, we tested that 260 level. I think you can probably get back up to 280, especially if you get like relief in names, like I said, Apple, Tesla, some of these, beaten down stocks that will benefit from the fact that there's no longer tax loss selling. So those are the levels there to watch for next week. And again, I think if we're up heavily into CPI, I would be a little bit more cautious as a bull. I think the bulls want more like sideways chop action into CPI to get kind of a bid off of that. Bears want us to go straight up into CPI because then that would likely be a sell the news if it is hotter, or cooler than expected. Anyways, let's get into the sectors. Semiconductors here up 4.37% on Friday, and we got above that 208 pivot, so that's also a failed inside bar level. On the daily, we should go up and test 215, maybe even 220, 200-day moving average. There's a gap window right there, and if you get through that, then there's a gap fill at 223.77. So those are the levels there for the semis. And again, like I said, really last week, you look at the semiconductors here, and they're really just, if I can get my fib tool, there we go. So they're really just into that 50% fib level. And if you look at the triple Qs, this is very close to double bottom. So when I see the semiconductors leading tech, that's usually a good sign for the market. It's another thing that kept me from getting too bearish on this market here this week, despite the technicals being kind of soft. So anyways, those are the levels there for the SMH. IGV here, it's hanging in there. You still have this green bar here, a green inside bar on the weekly, but you're below all 4 major moving averages, and I really don't like that. I think this sector is weak. Could it get up to 265, 267? Possibly, if the market cooperates. But this is not a pattern of strength. I mean, today, even though we closed green, you close below the lows of all of the month of December and almost all of November. So not really a strong showing there for cloud software. So keep that on your radar. Dow Transports. So last week, again, and the week before, we talked about this failed pattern. So green inside bar, that closed below last week. So that means 2 to 3 weeks here. That's going to come into play. However, in the short term, the transports had a nice surge today, really nice surge. And so that should give the market a lift here. So big picture, meaning the next month or so, market's going to be in trouble. In the short term, next couple of weeks, transports are leading the way. That is a good sign. Take a look at the jets. Powerhouse move here to start the year. This might also be a tax loss seller January effect play. Up 5% on Wednesday, up another 1% yesterday, and then up 2% today. So whopping move there for the jets off the lows. Basically 1650 to 1850 in really about 7 or 8 trading days there. So big move for the jets. Boeing leading the charge. Big move there. Southwest, nice recovery from those cancellation flights. So transport's in better shape right now. But again, remember, big picture, not a good thing. Interest rates, 10-year, again, basically testing this trend line again. It does look like it wants to go lower, maybe test that 200 moving average. It does look like bonds have a little bit of momentum. There's lots of talk of asset managers buying up a lot of bonds here in anticipation of a recession. So that could be the case there. The 30-year, I would have felt a lot better if it had gone up and tested 40, 50. Didn't quite get there, but it is coming back in, so we'll respect it here. But yeah, just bonds getting a nice bid. So that is kind of the case right now. Also, HYG had a nice bid this week, but still, this is not a great pattern. I think it just wants to go up and test that 50-week moving average. I don't think it gets through that, and I am not bullish on high yield debt right now either. And there's the JNK as well. Maybe that can go up to double top, 200-day moving average there. But I do not like this high yield debt look on the weekly time frame. Anyways, over to home builders, XHB and ITB both holding up really well. I think ITB can get to 66. I think it's about done after there, but this is held up really well, so we got to respect that. In the near term, as far as general real estate, VNQ, it closed back above this this previous level, but this is still a failed pattern. We got below the neckline. And on the weekly, you do have this green bar still, but again, like IGV, you're below all four major moving averages. That is not a good pattern. It's not a pattern of strength. I would avoid this one moving forward. Over to financials. This got a nice bid here. So XLF, and January can be a month where there's lots of rotation, lots of lots of new money that gets put to work. I definitely didn't have it in my bingo card that financials would be the outperformer this week, but they were. So up 2.22% on Friday. XLF breaking above this trend line. We'll see what it does. Maybe you can get back to double top. I don't see it getting much through that. Again, you did have, you closed below that green bar a few weeks ago, which does imply a sign of weakness. So maybe lower highs, maybe it can get to double top if the market really cooperates. But I am not bullish on fins in 2023. And broker dealers as well. This got out of that little bear wedge we were talking about and closed above 460 on the week. So this can, maybe get up to 480 in the short term. It's showing some strength. I will say, though, as far as brokers are, Robinhood, and I'm sure many of you guys have heard this, but they're in trouble right now. Again, maybe a little January effect going on here, right? They're up 10% since the lows from 1228. So maybe a little bit of that going on, but there is problems now. The DOJ is investigating them for their involvement with FTX, with BlockFi. There's talk about bankruptcy. So I would definitely avoid Robinhood at all costs right now. There's many people out there basically urging people to take all their money out of it, move it away, do something. And not just the stock, I mean the actual brokerage if you do own it. So I'm not seeing that risk priced in right now. Maybe that was, back here. Maybe that's what this was. Maybe that's what this was. Maybe it was just tax loss selling. I don't know. But I mean, if you have you really shouldn't be brokering with Robinhood anyway, but I can understand if you have to, but yeah, just be careful with that. Anyways, let's get over here. Let's get over to energy. So crude basically flat on Friday, but had a nice dump early in the week. And again, we've talked about this. Little bit more neutral to bearish on crude specifically in the first couple of quarters here. I do think this wants to go down and test 65. So there's your 200-week moving average. I would just be careful with that because, for one, I think everybody's going to try and buy that. So, because it's just so obvious, right? It's right there. And whenever I see that, usually a lot of the time the market makers will let it pierce when a lot of people try to buy the same area. Plus, you already got very close to it, and then you put in a lower high. So that tells me that there's more momentum to the downside. I think this can maybe get down into the low 60s potentially, but we'll see what it looks like there. I don't really have a position in it right now or a bias. I mean, I have a slight downside bias. It will recover, though, I think, after the first couple of quarters. But for right now, under a little bit of pressure here, so we'll just leave it at that. XLE had a nice week up here, up again on Friday. Stalled out at the 50 moving average, but it's hanging in there okay. I will just say that the weekly, you still have that big red bar to contend with, but the trend is still up. So, it's holding up really well. I still think energy has to do backing and filling. You see the same thing there on the XOP weekly, big red bar, and you're basically just stuck inside of that, although you did at least close back above this yellow trend line on Friday. So a little bit of a sign of strength there in the near term. On OIH, I want to point this out. I still think OIH gets down to 250. So that's that breakout level that was never back tested. But I will say, I don't like to talk about this pattern often because it's often misdiagnosed, but this could be a cup and handle on OIH on the weekly. So big, correction here, up move, and now just sideways to lower. And on the monthly, right now you have a nice monthly bullish inside bar there. So that's not a terrible look. It probably needs to do a little bit more. It could still go down theoretically. It still could go down to 250 and still be inside of this green bar. So while I think OIH is still in backing and filling mode, this is still a very good pattern here on the monthly. So I just want to annotate that. This is pretty solid. I mean, this could just correct in time. Just, be aware of that. It doesn't have to go to 250. I just think probabilities dictate that it does. But this is a pattern I will be watching in the future. But yeah, I do like that look on the bigger time frames for OIH. As far as uranium, so take a look at CCJ. Man, this just does not want to go down. Up almost 7% on Friday. Very resilient, right? So I said the last couple of weeks, I don't like this red bar. You're inside of it. It's bearish. And hey, it broke above it this week and closed above it. So that's negated. Now the problem is you're still inside of this big red power bar. Look at the volume there. So that's your big problem. But if you can trade up and somehow close above that, that gets negated and then CCJ takes off. So that's what I'm looking at right now on CCJ. I wouldn't do anything with it at the moment, but that's a pretty strong move this week. You see the same thing there on URNM, and I want to point out Sprott as well. Remember last week when I said, hey, look at the volume surge we got on the last trading day of the year and that outside candle. Look at this. 1, 2, 3, 4 days up. I don't think there weren't many stocks that were up all 4 days of this of the trading week this week. Possibly this was allocation here, and now you're seeing money rotation into this. So first of the year type rotation, that's certainly a possibility. I'm not sure if that is. It's just kind of me speculating there, but that's a nice move there, and you're above those moving averages now on the weekly. So it does look like somebody may be accumulating there. So definitely take note of that. All right, so let's get to Mosaic. Again, I told you guys last week that 100 MA should get defended. Nice outside week engulfing reversal, up 4.56% today. So nice move there. You see the same thing with NTR and Intrepid. Maybe this is first of the month rotation as well. So you see the nice outside move there on IPI. We'll continue to watch that, but yeah, nice defense of that 100 moving average on some of those names. And then DBC not really doing a whole lot. That did back off. This still has a weekly red inside bar, but there's a lot of support at 22 if it were to get down there. On to nat gas. This thing got dumped hard this week. Now down 50% since December 15th, which is 17 trading days ago and about 3 weeks ago. And we got a nice bounce off of 350 day. I think this is about done here. At least for the near term. This should get a bounce. I mean, it's down 50%, right? But let me show you here. So you have a down move here going back to late 2021. And then 1, 2, 3, 4, 5 inside candles. That's a bear flag. And that bear flag failed. What happens when a bear flag fails? Well, it causes, a lot of institutional power has to push it higher, right? In order to get that pattern to fail. Now look where you're going into, right? So you're right into that right now, and the 200-week moving average, and the 50-month moving average, and this green bar low, this reversal bar low. So there should be support here. I do think nat gas gets a bounce. 1, 2, 3 candles down into support. We should get a bid here, at least back up to 475, maybe even $5. So I think nat gas gets a bid here, but man, it got really whacked this week. Some of that has to do with the weather. I don't think a lot of it is. It's still winter time, so I don't know. Either way, the Widowmaker strikes again. Anyways, let's get over to the dollar index, DXY. So that had a bid on Thursday off the hot jobs number, got whacked really hard on Friday. I still am favoring a little bit more downside in this, but it hasn't quite broken this level yet. On the weekly, they still saved that 50-week. Well, they didn't save it. It closed below that 50-week moving average, but it didn't close below this tail candle lows. But I think it will eventually. And then I think the dollar will be a good buy again, potentially. Over to gold. It just continues to surge here. Again, ZB, the 30-year bond, bidding up. That's good for gold here. It's basically into my target. I told you guys 1875. Got to 1875 spot 2 today, and then pulled back. Could it get a little bit higher? I wouldn't rule it out, but I see right now that we're closer to resistance than we are to support. So I would not chase it up here. There's a lot of red up here. This pivot high. Gold's a little long in the tooth right now. We'll respect it. It's in an uptrend, but it is overbought. And, commodities do tend to overshoot. So again, I wouldn't rule out a move to 1885, maybe even 1890. But I would not chase it right now. I think you'll get better opportunities to buy it in the future. And then silver had a rising wedge pattern here, which is a bearish reversal pattern. And that started to play out Thursday. It got a bid up Friday. I still think this is long in the tooth as well. You still have a daily inside bar right there. But again, up into that big trend line here. And I think risk is to the downside currently. So I would not chase precious metals up here. But they've had a nice run, and we'll respect that for now. Platinum, what can you say? Up 3 1/4 today. Just continues to be a powerhouse here. Again, I wouldn't chase this either. Wait for a pullback or a correction. I mean, this was your chance to buy it right here. So don't chase it now, but just let it do its thing. But I like platinum a lot this year. And then copper, a nice power move as well. Still not above this red bar high, but you do have a nice weekly inside bar. So you give it another week or two, this thing can push through that. And if it does, that's a failed pattern, and copper should go a lot higher. So copper in much better shape here. We'll continue to watch that moving forward. And then you can pretty much guess Bitcoin did not do anything this week. Tiny little inside candle there. It was up 42 basis points on Friday. Very ugly weekly inside bar. It could get a little bit of a January effect bid. I wouldn't rule that out. But after that, I think this wants to go down and test 11 to 10,000. Anyways, let's wrap it up here. But spiders here. So again, next week, we'll look for a 390 test. Should get through that. The CPI might be a catalyst. Then after that, resistance is 395. And then gap fill at 400. Remember, 200 moving average and the downsloping trend line as well. Anyways, guys, going to wrap it up here. Come find Jason on Patreon. Come find me on carnivoretrades.com. Talk to you guys all next week.